Going today? Happy Wednesday. Hope you guys are having an all right day.
Hello.
James.
Hey. Sorry if you guys hear children in the background. I've told them to be quiet, but they don't really listen to me. So yeah, I'm gonna have to just give that caveat there. Mr. Eric, I don't think you've been on the call before, right? Or have you
I've been on a couple, but I've never turned the camera on.
Oh.
Probably everybody wish I just turned it back off.
No, that's good. I like participation. Mr. Nelson over here, we had the same memo where we're the same red shirt. So
yeah, right.
I
got the email.
That's all right. Maybe I'll send you an email, Eric. We can be on the red shirt club together.
Well, here.
So how's everybody feeling today? Oh, there we go. Hey, that works.
On there.
Great.
One of the many I've collected over the last 5 years.
Yeah. Oh yeah, that's true. Yeah. So how's everybody feeling today? Sentiment wise, what are your thoughts?
Good. I don't know. I guess nobody really knows where it's going, where the market's going.
Yeah, pretty nuts though, hey?
It is, yeah. I mean, some people are saying they're going to go, higher, and other people are saying this is the end, and who knows? Yeah.
So the trick here over the next couple of days and weeks, in my opinion, are going to be really focusing on what is sort of like the energy behind any sort of moves. So what I was going to kind of go through today is so sometimes I'll post things in the channel it kind of looks like the sellers are in control today. Like that's just like reading price action and things. We can go through that, but I also wanted to talk through some hedges and things. So please don't let me ramble on here. Feel free to ask questions, of course, and I'm happy to cover everything or cover anything you guys would like to know. So before any of that, does anybody have any burning questions or expletives they want to release? Okay, all right. I'll assume you guys are all responsible adults and have hedged and or at least have a plan in place for your personal risk tolerance. As an analyst, it kind of makes me that's what keeps me up at night. Not necessarily my own portfolio looking like crap, but like if you guys are like replicating some of the trades, I don't know like what your risk tolerance is or like what the levels are, that kind of thing. So I'm always like thinking about that in the back of my mind, like if you guys are going to manage a risk, like how do you do it like personally, and how can I interpret that? Like how can I factor that into trading somehow? So one of the things I've been thinking of is once I'm able to get out of these stupid shorts again, what I'm going to do here is kind of like reduce some of the position sizes for, let's say, like indexes, just because there's a lot of capital right now invested in those shorts, and we could have used half of that in order to hedge, but we didn't really know a couple of weeks ago where if we were gonna take a dive. So it's like you got to try to make lemons out of make lemonade out of crappy bag of lemons kind of thing. So let's figure out what's going on here. Let's get rolling. Let's just show you guys the Nasdaq here. I'll kind of do some just like live, high level sort of stuff. And feel free to stop me if you guys have questions. But basically, I still kind of think here that this is like our this is like one of our, I would say, like an irregular pattern. It's still kind of like a flat. If you're not familiar with like Elliott waves and things like that, we have a it's kind of like this gray area where there's like that 5% where you have like it could go slightly higher, or usually it stops before. I've seen it before where if I zoom in, I've seen it happen before where you get just close enough, with like something where we've been talking about the last couple of days, where you have you can see like a higher concentration of volume down here, and with that excuse me, with that being kind of like the last point that we had in reference, thinking that that might be a high, that kind of thing. But then all of a sudden now we get this dip and, shoot off into space again. So that kind of like invalidates one scenario, but then qualifies another. So I guess to keep it simple, of course, like anything related to a new high is, it's always like euphoric. It's always, oh yeah, we're going to keep going up to the moon. But the reality of new highs is not necessarily, going up to the moon or, continuing that. We had that back, let's see here, after I'd say the Japanese yen, carry trade debacle blow up that we had back last August. That really was one of those, it kind of followed a very, very similar pattern where, we had the first downdraft, a little bit of panic selling, volume gets elevated. And then we ended up having this, this stair step up where it kind of defied the, the laws of physics almost, just thinking that, well, enough damage has been done. Why does it keep going up? Well, also too, it was right before an election year, and typically from seasonality, you don't really see those. Like September, October. Excuse me, September, October sort of seasonality manifest when it comes to election years. But the other 3 years out of the 4-year cycle are typically filled with downdrafts and stuff. But we might actually get one in the summer. So I'm not really sure yet what we might see here, but I think we'll know in the next couple of days. In my opinion, I'm thinking that the markets want to, or people invested want to keep the markets up until like the 4th of July. So we can have a good quarter two, everything's fine, that kind of thing. And we're pretty close here. We're just a couple of days left of June. So that's at least like from a strategy perspective. But I wanted to bring that up because the two sort of dips that we saw are different in comparison. So just kind of looking at this at a high level, this one was a lot more protracted and drawn out. So this to me is like a longer, it's like a longer view of strength. So it's like 29, 30% increase is huge. That's a lot, but it also took 200 days to do it. And now we're looking at this sort of reflexive dip here. And from a longer curve wave count perspective, technically, since we have made a higher high, and you could now count this as a 5-wave series, that could actually be it. Not saying that it is going to be it, but like some pretty serious bears have been saying for quite some time that we're going to have an apocalypse. I don't think it'll be like an apocalypse. I also don't think that we're going to shoot to the moon. I think we'll probably just chop around, in a couple 100-point zone here, while like quarter 3 data kind of gets digested after some earnings, things like that. That's at least what I believe for now. I still think we're going to have a pretty decent sell-off, but that should be more around the lines of kind of going back to where we had this this big clump of net selling down here, and the reason for that is there just wasn't enough time to accumulate. And when you look at like I said, like 200 days, right? So there was enough time here with enough high volume where you saw, a little bit of accumulation, then some selling, and then of course, bouncing off the 200, and then, kind of keep rolling with that. So in my opinion, that's like a different type of like all-time high because it keeps creeping up. Like we had the all-time high here, and then, it keeps kind of grinding up here. People don't really know when it's going to stop. And if you guys remember, that's when we were talking about like the blue sky, where or Alex as well was talking about how it can just keep running and running and running. But eventually, you do see some sort of selling into it and some sort of slowing. What I think is different about this high is how fast it's gone and how little accumulation there's been. Now, let me kind of dig into this a little bit more. I'm trying to show you guys a good volume profile. So from peak to trough here, so from the low to a new high, we're only talking about 80 days. That's a sprint. That's not necessarily, and the first couple days were, crazy with April and tariffs and whatever. I mean, it's been an absolutely, confusing and frustrating time to trade the markets. But since now this, quarter 2 is coming to an end, I have a feeling that the narrative is going to change for quarter 3, where you might see more selling, different strategies being executed in the market. Like what I mean by that is sometimes you have like when you have Fibonacci retracement levels on your charts, Sometimes, prices will bounce, 10 points above it or 10 points below, that kind of thing. And then maybe next quarter, they're change their algorithms up to try to trick you a little bit more, where it's like, then it'll stop exactly on the fib level. I've seen it change like that. But most often you don't see more, or you don't see the same thing more than twice. So I wanted to say that because now we've gotten essentially, this is I didn't know I didn't think we would stop exactly at the last high and make like a double top or triple top. I kind of thought that we might make just a little bit more of a new high, or the possibility was there, but I also don't think that, like I said, the accumulation's been there for the bulls in order to sustain this run. So that's really, I think, the big difference between last August and what's happening right now, is that there's not a big, there's not enough inventory at the lows here in order for them to continue to drive without some sort of pullback and then consolidation. Now, of course, I could be wrong, been wrong often, but I guess the main takeaway here is that, if you're looking for some sort of, guidance or direction, I think that yes, measurements are important, but also too, if you take a bigger step away and you take a look at like what's going on with volume in general, and also like the duration of it. So if you look at this sort of pattern here, without making a new high, we would have had ourselves a nice looking, head and shoulders sort of pattern here. Instead, you might actually end up having a double top like this. It's called it's like an Adam and Adam versus Adam and Eve. Adam and Eve is like it's just a chart pattern where it's like one peak is higher than the other, and it has like a different ratio for success for trades and stuff like that. But the long story short of it is, if we do end up seeing some sort of double top like this, I think we might get one more push here, one more push higher, but it might be only incremental at best. And one of the reasons I believe that here is because a lot of these days where you see this high volume selling, this wasn't too long ago. So we're talking end of May, only a couple days. So we've had a war since then. We've had all sorts of fun stuff happen since then. But you do see a lot of these big sell days that happen, and when they do happen, the volume is very high. So it's almost like whoever's selling into this has at least, in this sort of zone, it's a consolidation zone. There might be some accumulation from buyers that you can see here, but I do think that part of that was, maybe just general, it might be retail buying in, it might be bigger institutions that feel like it's going to rocket up to the moon, and they're trying to get in and participate versus staying out and having to explain to their clients that they're not doing anything with the fund. It's almost like you have to force the action with some of these things. So with that being said, with this new high here, if you look at some of the measurements, just doing this real quick, and I'll definitely update these on the regular charts, but you can see here that even just quick drawing here without really doing it by precise measurements, we just tapped this 1.618. So technically, you could make the argument that this irregular pattern I was talking about before, or flat, whatever you want to call it. If I draw out this sort of 5-wave structure here, you can make the argument that this is sorry, 1 second. There was a very short kind of wave here. So you could, sorry, that's not looking right. 1 second, there we go. Sometimes, here we go. That's a little bit better. Sorry about that. So this could be like your C leg, and this is where I'm just going to draw this here. And we just saw here that the C leg just stopped at this 1.618. Now, sometimes people say that like a C leg and a wave 3 are indistinguishable, but there are subtle differences. And the C leg sort of narrative here is just because we've had this 3-wave down, and this entire pattern here, whether it's a flat or irregular, still has the same structure where it's, 3 count, and then a 5 count down. And now that we've, again, like you can make this argument here that this is 5 waves up. But anything beyond this 22,305 level is going to be a little difficult for the buyers to get above. And if you notice here that, we like the volume today wasn't super strong, but the sellers were in control all day. So now that this level's been hit, that's really what we want to look for now. And if you're considering a hedge, one of the things you can do is set one like right above the high. So if I zoom in here, and yeah, I mean, check it out. You can see it just tapped it to trigger those sell algorithms, and then here we go. We saw the sellers in control for the vast majority of the day, and then also we saw one of these lines here is the last high. I want to say it was like right around here. But anyways, like the actual close of the day was below the last prior high, which is like a very, very small, technically bearish sort of thing. But when you remember that 95% of all these shares are traded by algorithms, so algorithms interpret that as a bearish sign. It's just something to keep in the back of your mind. But I also want to be careful to say, like, if you're looking for something, you're going to find it, right? And I don't want you to like hang on every word as a fact. It's just like an analysis. So my opinion here, the fact that we saw a decent rejection from the top, or the top from this morning, just because it kind of poked through there, what I would do is set some stops above where like this last little level is, or at least like add an alert. So if you add an alert at like 22,310 or something like that, and then you could set a stop at, let's say, like 22,331. So that's where I'm thinking that if like the stop is far enough away from the prior high that if you do see some sort of stop hunt, usually it's only about, especially if it's at a new high, it's only about like a point or two, because usually there's a lot of limit orders up there to sell. And kind of like I was mentioning before, like now that this level's been hit and you saw what the response was, now what we're looking for is the counter response from the bulls to essentially figure out where the next level of resistance is. So I think we did see that going into close today, but there also wasn't a lot of trying by both sides. I think the bears just wanted to close it below that last all-time high target, and at least for like the Nasdaq. And I think the bulls also want to try to accumulate a little bit more before they try to jam it up more than that. There is a possibility here that so if we do end up making a new high, I think probably what I'd like to do is maybe do another just like a quick webinar or something, if you guys are interested in something like that, just to try to talk through what the different scenarios might be. But as I see it right now, there's a possibility here that we might see like a like another like a 5 wave sort of thing, maybe overnight, or maybe like the rest of this week. But what this would do is tap. So again, like this 22,400 level ish. That's not too far away here, but if you kind of clean up these trend lines, it's like 22,500, which would kind of suck, but it is what it is. So this trend line here, in my opinion, would probably be the maximum if we do see a continued new high. So I'll stop there because I know I've talked a lot, and I talk a lot, or I talk pretty fast. So what do you think? Is it crazy? Is it what seems realistic? Or I try not to overthink it too much. So any feedback, thoughts, comments, questions, concerns? No complaints.
So are you looking for this to happen within, are you talking, is this a days or between now and September 30? What's our time frame? Just a matter of days on this? Yeah, probably a couple of days. Okay. Yeah. Just from so for example, like where we're at now with the the chart and stuff like that, when you watch the price action throughout the day, you can kind of see that it's now going to get expensive for the bulls to try to buy this up, because now there's sellers stepping in and reinforcing those resistance zones. So as the buyers trying to keep the market juicing up,
you don't want to let it fall too far because then you lose momentum, and then it's way more expensive to continue to buy it up and make new highs. So at least from a historical, excuse me, like a historical perspective, you might see this by, let's say, Friday, or maybe Friday ends on a bullish note, and then something happens over the weekend, and then the whole thing tanks on Monday. That's really the biggest risk with these with the indexes here, is that you can what was that, like back in April, where we had the tariff thing going on, where Friday it dropped 5%, and then over the weekend or that Sunday night it dropped like another 5%. So when you woke up in the morning, if you went long on Friday, you got destroyed on Monday. So that's the one thing that I kind of fear, is that you could get this sort of gap down if there's a huge like a huge geopolitical event or something like that, where that'll throw a lot of cold water on any rally. Well, you would think so, right? But there was just a little micro war over the last couple of days, and markets didn't flinch an inch. Sorry, I don't want to rhyme there, but so from just a charting perspective, I think we're at really close to the maximum for like where we can go. And if you look at the RSI down here, it's just screaming through the roof. Anytime you have these, you get these at minimum like 1.5% or 2% days where you get those sort of sell-offs here. But right now, I think what's happening is there's just a lot of big players that are distributing out into strength here, and what we should see is some sort of pullback. So now that I've kind of covered the bull scenario here for those like incremental new highs, now what I think we could see here with the bearish case, and I won't spend too much time on this because I know we keep talking about the bearish cases that never really happen. So I'll believe it when I see it, right? So cautiously optimistic, I guess you could say. I'm conscious of your pain. All right. So if you step out here and you take a look, we have this point of control that happens to be right at this pullback level. Now, point of control is really just where the most volume is, traded hands. So if we get rid of the old view, so we want to retrace the last largest wave peak to trough. So you can see here that there's a bounce point at this 21,190, which is not that bad. It's still no major correction that we want to see. But if we do see something where, let's say you get like a ABC down, and then you get a bounce, like a strong one, then that's where I would think that this would be a great place to add some longs. So like this 2,500, and the reason is because we could see one of these sort of 5-wave down structures, and like what I was talking about before with if I bring up Bitcoin, sorry, one second, let me grab the clip from it. So this little irregular flat clip, this is, if it's a flat, it'll just have the same 3 pattern in line with itself. And I think again, like this does kind of constitute it irregular, but I don't know, it's gray area, like I said. But anyways, if it's a flat, it's sort of the same sort of setup where it's a 335, and this is right now a very clear 335 to me, where the next move should be 5 waves down. And what the key is going to be to understand where we're at, because there is, I have to say with a word of caution here, there is a possibility that we could see something kind of like this, and then it kind of keeps bouncing around, where then you get this longer term like flag pattern where you could then see another grind around, and then you get a new high. But again, it would be incremental, like this sort of trend line here. Let's say price stops here, and it should. Look at the RSI; it's ridiculous. Like the euphoria can only last for so long, and then either you get a blow off top and markets, then forget it. Everything's out the window. But a blow off top will it will return back to earth, and it'll do it very quickly. and liquidate a lot of people. So I think the market makers know that, big players know that, so they're not going to try to, juice the market so high where then everybody's piling in, because that becomes very dangerous for any sort of positions, because they could be just wiped out in a day with a 8% crash. You know what I mean? So this way is a little bit more controlled, where as sellers you can distribute out in the strength, vice versa. It's like normal market function. So this is just one scenario to be aware of here, is that you could consolidate up here, but this would be a very, very profitable chop, right? I mean, you got a nice range here. I mean, I'm not saying we're gonna, do this. I think that this is just one option. And you can really tell by the first wave, whether it's going to be like a, sorry, I don't want to go too fast. But I guess we'll just keep it at that. This is one option, still very bearish for the short term, but longer term, just chop. And that might be where we sit for a while. So with that in mind, what we're really looking for here is this, like the first sort of like wave down here, whether it's 5 waves or not. So in my opinion, this is a little bit longer than I think it probably will be, but in my opinion, if we do see this like 5 wave sort of thing and it bounces here at this, let's say 2050, you might see, maybe something like this where it kind of shocks people, but it kind of makes sense though. Like it would be a nice pullback. It give everybody a good chance to exit shorts or at least hedge up. I mean, that's a 10% drop, which is nice, but not like spectacular, right? If you really want to short, but it would be nice, right, to have a pullback. So you could, kind of look at this 2,500 level, and if we do see this 5 wave down, then the longer term, that sort of confirms this pattern, because you always see, it'll be fractal in nature, where this first wave down is going to have 5 waves. 2 will have a ABC, and then 3 will have, well, you'll know when you're in a wave 3 down. So does that make sense? Is this sounding stupid or? All right. I'll assume that everybody's like, yep, sounds right.
Yeah, it makes sense to me.
Okay.
Yeah.
And what I like to do, guys, is give you this different scenarios. It's really to just say like, yeah, it's bullish right now, but it's getting a little ridiculous. And I think people are starting to realize that. So there's less participation. Like that's kind of how tops and new highs work. It's just more of like a, it's a process. It takes forever to go through the distribution process. Normally like 45 to 60 days, sometimes, maybe even 3 months. I mean, we saw that in, back here, it took forever to distribute a lot of this stuff. But we're starting to see, some cracks develop, and I think that, part of the issue is that we just had the ceasefire thing and euphoria and everything's fine, but we still haven't seen oil recover, still haven't seen gold recover. So I'm kind of thinking that this might be like more of a manufactured sort of thing, where bulls are going for like a specific new high, then let the sellers take over. So then again, they can buy it all back at lower levels, because nobody wants to buy at these levels. I mean, these levels are high. So hopefully it makes sense to you guys. At least that's kind of like the logic process that I go through. But I guess, so those are like I think the 2 probably pretty dominant scenarios, is that we just have these incremental highs, or we have like this, final retreat. But I still think that maybe like the end of the week is probably when we might have a turnaround or something. So that's kind of wanted to use that as like the microcosm here for like the S&P. The S&P has different dynamics, different charting, I guess you could say. Right now, you can consider this like a head and shoulders, but usually a lot of the other indexes will follow. So another possibility that I'm thinking of here is that we might see now a sector rotation. If we just see chop, I hope we don't, but if we just see chop, in my opinion, this to me looks like a actual, like if you pull up the Dow, this one looks like an actual real ending diagonal, like a proper sort of wave count, proper retracement. And if you draw some fib levels, you'll see that it aligns pretty well with, with these different extremes. So like 43, 250, just doing that, real quick off the cuff. In my opinion, again, like it hasn't quite hit it yet, but it probably will. And that's why we also have the same sort of thoughts about small caps. And I'm sorry, this chart is, small caps is the same thing. It's just, it's stopped at its 0.618. So yeah, what I kind of think that if we do see some sort of sector rotation, I don't know if it's all going to stay elevated for long. Again, there's just a lot of strength issues, and you see a lot of like defense, contractors and industries and stuff that are kind of keeping high, like and we have the semiconductors like stocks that's still really high. But you also see other things that are kind of cratering, right? So we see like some of our like quantum stocks, which have taken a couple percent of a backdrop in the last couple days. And sometimes you can see, oh man, look at this chart. Like sometimes you can see these sort of like flag patterns develop where it looks like it's gonna shoot higher, but then ultimately the flag breaks down and you end up getting like a C leg, and you might continue to get that bounce sort of thing. But I'll believe it when I see it. Let's just say that. So that kind of does it for equities. Maybe any questions about equities?
Well,
Eric, I can see you got a
what's the
question.
target we're looking for on the TSLQ? Do you have I nearly killed it today when I was up some, but decided to hang on a little longer.
Oh, okay. Yeah. Good question. So, let me actually pull up my other chart here. Okay. So for Tesla, so Tesla's a little weird. This higher level structure kind of looks like a 5 down and then 3 up, which is on this chart. I know it's a little busy, but it's kind of the setup here. From a backside sort of retracement here, it did retrace up, to this 886 fib level. But I think that once you clear out all this junk, I still have like a downward bias here. Like I think it's very possible that this is like our wave 1 and 2, and then we've started the wave 3 down. And you can kind of see that a little bit. Like I don't want to say, oh yeah, it's confirmed. We got 2 days of selling or 1 day of selling. It's not confirmed. But if we do keep seeing, let's say, a knife right through the 250, then yeah, I would say we're probably in a wave 3. So with the TSLQ, what I'm looking to do here is to continue to hold this at least until this support zone here is tested. So this is where we had a decent amount of accumulation before, and then also where we had some sellers probably trapped down here, because if you remember, we had this gap up. So what I'm thinking here is we've seen this this ABC with like a truncated sort of level here, and my opinion on Tesla again is just heading probably down to this 250 range, but I would still buy back the TSLQ once it gets down to this consolidation zone. You might even get lucky around like the 300 zone. There's some sell delta down here, but for the most part, it's getting, let's see, 17, 16 today. I'd have to look and see where the portfolio is, but yeah, I mean, if you're in the green and want to close it and then maybe reset later, that's probably not a bad idea. But if everything else like Nasdaq and stuff is looking a little toppy and heavy from like an RSI perspective, then I'm thinking Tesla's kind of leading the group here. So we're probably going to see a little bit more of an acceleration. Yeah, I mean, I haven't had time to kind of like follow up on the robotaxi news, but I think that there's it's just one other thing, right? Like it's if you're valuing the stock and you're in it every day, then yeah, it might change your analysis. But I'm thinking about it from a way more broad perspective of like the entire market is overinflated, and Tesla is no exception to that. I mean, if you remember this super fun earnings report that they had here, like this does not scream $1 trillion plus valuation for a market cap. To me, at least, like you got to have some revenue coming in. So those are my thoughts on that. Did that answer your question in a long-winded way?
Yep.
Great. I'm really good at the long-winded stuff, guys. Take notes. Well, you don't have to take notes. You got the videos recorded. I also wanted to cover like MSTR here. I know a couple of you guys probably want to kill me for this trade, but how are we supposed to know that Bitcoin was going to go to the moon and crush all hopes and dreams of profit? But to be fair, SMST has delivered many times. So to get caught with the hand in the cookie jar, I guess, trying to make a fifth attempt at trading or shorting, MicroStrategy, well, now we just gotta wait. So from this chart, what I'm thinking here is like it's kind of like I don't want to call it like a crown, but it's so it's one of these weird patterns where you see like a little head and shoulders here, and that's kind of what gave me confidence to say it was moving down. But now that we've had that the first down wave and then we've had a push back up, now what I'm looking for is again this ABC, and the ABC might not be as deep as what this is modeling here, but this first wave down here, I think for 350 is a reasonable price level, and that'll bring us right around to that point here, where I think I remember saying like you could hedge with MSTU, that kind of thing, but it should bring us back to at least like cost basis, at least for like the portfolio trades. It should definitely get to that point. If you just want to be out of it, you could set like a GTC, like a limit order for break even or something like that. I do think it'll get there. It's just a matter of time at this point. Like the way that the larger chart's been developing here, this has actually been relatively predictable, which is with this ABC up, and then now we have this kind of top that had happened here for a while. They had the earnings that passed, which were also garbage. It had that terrible earnings. But this now also has a high RSI as well, for no reason. It's really just based on Bitcoin. Bitcoin's just been screaming up, but it also was down sub 100,000 a couple days ago. So the big takeaway here is that this thing is pretty much tied to Bitcoin. The only concern I have is that if Bitcoin becomes a inflation or some sort of hedge against inflation, like that's going to be an issue. But we'll see. Usually if one thing starts to melt, then they all start to melt, even bonds. Any questions about like MSTR, price targets, levels? Okay, yeah. So I guess in summary, with some of these single stock names, some of the different shorts that have been taken out, yeah, been caught by surprise again. But how are we supposed to know? So the only thing that we really need to do at this point, now that like let's say Nvidia has made like a new high, so now that everything's kind of made a new high, the bulls can clap themselves on the back, and then we can sell it off, and then get back to business as usual. Because now that we have like a point of reference for the low, and then also if we get a strong rejection, like that will confirm a high. So then we can start to measure, and then we can actually start to get to the point where we can start making some higher probability trades for success. Yes, Susan. Go ahead. If you're talking, I can't hear you.
Are you there? No,
Yep.
I'm sorry. I'm on my phone and not on a computer screen, so I need to hire an 8-year-old to push the buttons. Regarding these leveraged single stock names, like whether it's MS or SMST or the Tesla TSLQ, how much decay are we talking about over time? Can you just hold these things for a long period of time and just wait to see?
Yeah. Yeah.
So how much decay is happening? Unlike options, which are, you're really on a time clock. What happens with these?
Yeah, that's a good question. So usually the biggest, like largest amount of decay happens with like the short funds, unfortunately. But it's just that daily compounding. So instead of so it's like if you're up 5% one day and then you're down 5% the next, and then if you're up 5% the day after that, kind of back and forth, you're still not going to be at that like quite at that spot where you had that first drop. So that daily compounding is really that decay. So it's not necessarily like a decay like an options contract would be like with theta. It's just more of a decay from like where the price originally started. So if you're getting beat up on a short fund, you'll have to have more of a move lower, like in indexes, for example. Here, let me just pull up SP. Let me pull up one of these guys as an example. Because yeah, I mean, I've been looking at these over the last couple of days too, saying, "Oh man, I have gotten beat up here." But I've held these twice, and some of you guys who've been with me for a while, have seen me get out of these, pardon my French, these shitty short trades, and trying to really get out of it. But when we did see that major volatility event, just looking at SQQQ here, so this went up crazy in just a couple days, and that's typically what you'll see when you have these when you have this like sort of counter trend move. You'll have like if you have a wave 3 or C leg or something, you'll have very quick movements, and what that'll do is that'll add to the price, like let's say 20% in a day, and then the next day it'll add another 20%, and sometimes that can like I think you guys have also seen that happen with SOSX before, where when they had that big drop like back in summer, there was it was a 20% move up, and then the next day was 20%, then the next day after that, like it was crazy. But you almost get to the point where all of that decay has been totally canceled out by those really fast movements. So like if you were holding TQQQ, you don't get the very large movement days. I mean, yeah, sometimes you do, right? So if the market goes up 1%, TQQQ will be up by 3%, that kind of thing. And if it happens, like again, if you're in a wave 3 or a C leg, it'll just keep rolling. But from a decay perspective, I'm trying to answer it in the, I guess, most intelligent way possible. I don't know if it's working, but basically it's like you have you have this constant like daily drip of value that come out of these funds, and if you hedge them with the opposing fund, so if you buy like TQQQ to offset the amount of money you have in shares, that'll be a perfect hedge for it. So you'll be able to go back and forth and bank those gains as a hedge, and you don't have to worry about the decay because you also have the other side of the instrument. But in my opinion here, and when you run the math on it, you really recover a lot of that decay when you have the big days. Like the 2 or 3 big days will reset all that decay, and essentially like set that bar higher or at least at that point where you originally took it out. And if you guys remember, just those handful of days here, I mean, it tracks to the chart pretty well because it's 3x leverage. That doesn't necessarily mean you can't chart it. I mean, you can see kind of how this stuff works, and you can map that back to what you see on like a regular chart, or at least like the underlying instrument. But this sort of move here, if we had a continuation, that daily compounding would have accelerated, and you can kind of see that like TQQ if you flip the chart. So you can kind of see how it looks very, very similar, but not exactly the the all-time high where it used to be, right? That's because it had such a huge downdraft, back in, down to 35, coming up from 90. That's a huge drop, and a lot of that is just because you had these big down days, so it sort of like accelerated that compounding. Does that make sense?
Yeah, absolutely. Got it.
Okay, so the only other thing I'll say about it is in the future, like if you're holding, and I haven't really like leaned on this a lot just because it requires a lot of like communication and like, so I haven't done it with the fund, but I do it like in my 401k fund. So if you're holding like SQQQ and it's starting to deteriorate on you and it looks like you're losing a lot of money fast, yeah, you can still hold on to it. You can even make money off it, like use it to sell some calls. Because if the market's just going to keep going up, you can sell calls for the day. And even though the volatility is low on it, you can still do it. And I've been doing that in my 401k, for months now. And it's been great. I mean, probably it's like 30, 40 grand on like 5,000 shares just from selling regular calls. And then buying them back, once you start to see some sort of decline. And you can do that with like setting limit orders on, things like that. Yes, go ahead.
When you sell those calls, how far out are you going? Just within that like 3 to 4 week period or 2 to 3 week period? Okay.
Yeah, and the reason is because like, let me pull up US 100 again. So the reason is if we get to, like a situation like this where there's consolidation, and it kind of looks to me like, okay, we're making this head and shoulders. I think I did this trade here where, I see that we've got a couple of peaks here, and then we did this big sell, but then I started to see that we're getting support here, thinking that we'll have some sort of retrace and likely make another right shoulder or something. So this is where I sold some calls on that short position, and once it hit this spot up here, sorry, I know it's getting a little cluttered with my drawing, but once I think it was like the end of the day, thinking okay, well it's gone up a little high, like maybe let's trim it out. I think there was a little bit more risk in the middle of June to all that, but thinking that hey, I don't want to I don't want to go into the weekend with my short fund here, holding or like selling calls against it when we could drop. And that's what ended up happening was that, Sunday night, but then they got bought up on Monday again. So Monday, I ended up selling the same calls for the same strikes. And that was a 2-day trade, which was a couple $1,000 on that, even with a volume crush, even with a volatility crush. Mm-hmm. So it's just one strategy you can do. Like you can also buy puts for it, but I kind of caution against that, especially with a short ETF that's leveraged, just because that decay is going to also decay your option on top of the decay for the theta. So it's easier and I think more cost effective and less stressful to hedge with the opposing triple levered the opposing like the TQQQ. Hopefully that helps.
Right. Okay.
Sorry, I know I talk fast, guys. Okay. What else? Let's take a look at the yield quick. So this guy, you guys like how I clean up the charts before we talk today? Yeah. No, it's not that funny. So all right. Oh, by the way, before I forget, I have subscribed to Cheddar Flow. And what that's going to do is that's going to give me, I mentioned something like this at the beginning of June, but then things went nuts again and took my attention. So Cheddar Flow gives you options data like big gamma levels, then also dark pool data. So what that's going to do is, for example, let's say there's a lot of TLT buys at the corresponding level of 4.5%, something like that. That usually will mean that that's a good place for price to bounce. So that should help us. So instead of it's sort of like a confluence of Fibonacci levels for bounces, wave patterns and measurements, but then also adding in that unknown piece, which is the dark pool data, and also our options gamma, which drives a lot of dealer hedging and cross hedging, all sorts of complicated stuff. But what I would like to try to do is try to kind of distill that down into my own model and just show you guys like the simplest sort of views where it's like, hey, here's your 3 levels of like support or resistance for the day or something like that, or the week or something like that, and just try to give you guys more of a predictive model on these gamma or like these sort of like volume icebergs that are under the surface that we don't really see on these charts. And to be honest, there's really no one service that like joins them all together like the one in Lord of the Rings, right? You wish, but so you have to do some data work on it, and not that hard to do. It's just a matter of time and trying to figure it out and make it look nice. So, all right. So with that being said, working on it, got a sub to it. I'm trying to tweak some filters and stuff, but you can extract data, and that should help out with some of the charting and stuff in the future. All right. So the yield and stuff here, we have what looks to be like a head and shoulders sort of move, but I don't really know if that's it. This sort of pattern here hasn't really wrapped up yet, and when I'm thinking that this is it's I think it's a longer term B wave. Okay, so I think it's like a one of these things where we'll see the rates return lower, but we're not going to see rates return like that until until we have some sort of like equity apocalypse or not apocalypse, but until we have some sort of like things calming down, I guess you could say, then I think that the rates will stay lower. And I think the catalyst for that is going to be we just need to have some sort of like correction in equities that is sustained and not bought up right away. And it's going to be hard to discern whether it's happening or not. But it still looks like a pretty classic flag here. And this looks like just an incomplete like fourth wave. We might have just a little bit more to go, like this 4.25. I think I was saying in my targets. Before you get this last sort of like ABC up like this. And this is really what I'm looking for to get up to like the 4.7 region. And that would be awesome if you had TLT. So, or not TLT, TMV. Don't buy TLT. Not yet. So that's kind of what I'm thinking for yields here. And this will really pressure, like the treasury. I'm sure Powell's going to get a lot of crap thrown at him. Mr. Too Late or whatever he's called or getting called these days. I mean, he's inevitably going to be blamed for a recession, but you can at least try to like read the tea leaves here and try to anticipate what's going to happen. I think just again, like one more boost in interest rates is going to, kind of hobble the housing market where it's already been sort of on the decline. Inventories increasing. I haven't really seen the auto sales yet for June, but I'm going to be looking at that pretty soon here. I think it was released, I want to say like 2 days ago, but I'm going to take a look at some of that higher level macro data. So anyways, like, interest rates suck for people trying to buy expensive things. You know how it goes. Any questions about yields, bonds, rates? All right, on to gold. Gold has been, gold's been a little weird because we've had, one second. So we've had this, and this kind of looks like a flat sort of pattern, like the Nasdaq was until it started getting higher and higher, where you can kind of see this, this sort of ABC here. And now what I'm looking for is something more like just a little bit more of a correction, maybe down to like this 3,300, and then maybe like a pull up here, and one of these like wave 3 downs, which, believe it or not, might like we might actually be able to double the dust position and get out of it at a profit. Oh my God, that'd be awesome. But we still see, or like you can make the argument here that there is some sort of head and shoulders at like a larger time frame, if this pattern actually does materialize. So what I'm looking for is a bounce here, and I'll be adding to gold miners, so like NUGT, and because that's also the counterpart to dust. But really looking forward to hopefully getting some sort of movement there, because it'd be nice to go long gold again when everybody else does, versus just kind of trying to wait for it. So I guess kind of like I mentioned at the beginning of the call, trying to go for more like smaller position sizes, more aggressive, with buying in at good levels and that kind of thing, versus like the longer term swings, because one, I'm getting a little bored with it. Two, this constant focus on indexes is not good for my health. Just kidding. But the constant focus on the indexes, I feel like we're not taking advantage of some of the other better looking charts for longs and shorts. All right, so that's kind of gold. Silver's kind of the same sort of boat, where you got this this kind of head and shoulders developing up here. Not it does kind of look like a finishing sort of pattern, but again, five waves or wave 5 extends in most of these cases here with metals. So what I'm expecting to see here is a little bit more of a, this chart's a mess, sorry. What I'm expecting to see is one of these like finishing moves here where you get a good bounce and it just kind of rockets up. And that's probably going to coincide with the last run up with gold before like a larger sort of correction with metals. So one of the cool things here that I've been looking at is oil. So oil's a weird things going on with oil. We had an absolute smashing of oil, and I do think this was by design, because you've got this jump in oil that was sold off, and I mean there's barely any breathing room for any bulls for oil, and it just got right down to this 200, and it's not really budging from here, even though we had big sells. Like you can see these big sell spikes here, testing these lows. Then you got another test today, but just with less than half of that same volume that was used yesterday. So my opinion, what we might see with oil is, and now we're kind of at that 64, 65 range. That's the range that we before it went off into space. That's kind of where it was. So it's possible we may see this sort of ending pattern where we see like a 1, 2, 3, 4, 5. And it might bounce off on the 50, but after that, I do feel like there's a lot of potential here. And it's not intended to be political. I'm just trying to call it like it is. Like I really don't think mortal enemies like Iran and Israel are going to stay peaceful with each other for long. I mean, I would like to hope that that's the case, but I'm just trying to be realistic about it. And oil could be a very profitable. I guess, recovery trade versus something like going long indexes and, making a couple bucks and having it be higher risk. They're not going to give oil away for free. It's got to stay at like that $60, $65 a barrel sort of price zone in order for like U.S. frackers to be positive with their margins and stuff like that. So that's oil. So we'll just wait on that one for a bit. For gas, this one I think is getting really close to a buy here. We've had a lot of this selling. It kind of seems like the selling is dying down. Like you can kind of see the the oversold nature of this, and it also made like one little quick low. So this now kind of looks like a 5-wave pattern where it just had a very, very long wave 4 that ended up being like a triangle for this. So I'm thinking at minimum, what we could see here is, well, I mean, you don't want to do it yet. You want to wait for confirmation. So if it does head down a little bit lower, which it might, kind of like oil, then if you get a good spot to buy in, then if you really wanted to buy some, oil or something like that, most likely it'll do like a 50% retrace, if not maybe more, maybe like 0.618, depending on how far down it goes. But yeah, the long story short with this, guys, is that it's kind of at that, well, one, it's very oversold, just like oil. So just even like a reflexive retracement is expected. So that's why I kind of think that like the energy play is going to be way better than anything equity related, just at least from like a all-time high sort of perspective. Oh, Susan, you got a question?
Yeah, just about gas again. You had said earlier that gas has a seasonal pattern. So is gas right now at its seasonal low?
It should be, yes. So like late June is kind of when that happens. I've been kind of getting weird seasonal signals from gas. Let me take a note, Susan. Let me get back to you on that because I want to dig back into that again. Because I mean, this does kind of coincide with seasonality, but if we have a low in July, maybe maybe we might see, excuse me again, maybe we might see some sort of like, wave 5 sort of consolidation thing here before, you see another run up, like maybe in August, September, when I think, the gas supplies become more into focus. But that's, that's kind of my thoughts on that. But let me get back to you on the seasonality. Okay. All right. Stocks. So this one has been, I don't want to say frustrating because it really hasn't really been frustrating. It's more of like slow and steady, death by 1,000 cuts sort of thing. Stocks has made a very clear sort of like an ABC kind of move off the top. You've got your head and shoulders here, before and now. we've got this buy up, but you also see a ton of volume here. So that's telling me that there's a lot of people, and part of it too could have been, okay, there's a dividend, right? But you didn't really see a whole bunch of that before the last dividend. Kind of what I'm thinking, like what would help in this situation would be like more of the cheddar flow data, where you can see if there's lots of big buys or big sells. I mean, yeah, you can see a lot of these are actual like net buys, but what you don't see is were these cells here, the same sort of size that was bought down here, or something like that. So like I can see like a 5 wave sort of structure here, pretty clear. And if you zoom in even further, this is where it gets even better. So, and this is, again, there's just like little things everywhere that scream equities are topping to me. There's, you can see even a tiny little 5 wave thing up here. But if it's actually going to stop there at like, around 240, yeah, I mean, you'll probably see it because it's still overbought, kind of like NVIDIA, kind of like everything else. But, as of now, it's still looking kind of like it's just hanging on there. I mean, it's going to have to close this gap eventually. It only closed half the gap before, which was weird. But I think we also got some news that day too. But yeah, so that's looking at that. Just do Bitcoin real quick. Bitcoin, this one second. This one here is turning into a little bit more of a complex sort of correction. You've got this like flag developing here from like a longer term breakout. So usually when you see these sort of flags here, you can sort of discern like what the direction is going to be. Even though this looks like a big like bull flag, it probably is. So I want to just be cautious about that, where you can pick out the 5 waves here. And you can also pick out the 5 waves within the longer term wave 3, just by looking at it quick. But this sort of correction here, I'm thinking it's either already wrapped up and we've just got one ABC down, or this now turns into some sort of series of ABCs, like a zigzag, where this one might actually be probably a little more realistic if we're going to see anything with equities. Like anything change with that. So I think I've got something similar like that on my other chart, but could still head up a little bit more, but anything around anything around like the 108 level is going to be a struggle to get above that trend line. So I guess the last thing I'll say about it is I kind of expect this to happen, and then go back down and test this 200, and then MSTR is going straight down if that happens, but we just need to see some topping first. So I think that's it. Any other questions, comments, concerns? Yes, Mr. Neal.
Yes, could you just take a quick look at UVIX?
Yes.
And just on a terminology question, you often say consolidation. What do you mean consolidation? And after that, it can go up, or
Yes.
consolidation, or it can go down, or are those both possible, or just one of them?
Well, at the level it's at right now, consolidation at this point means it'll probably go up here. And some of the things you can see regarding that is the volume profile here on the bottom for each one of these days. Let me actually try to clean this up a little bit more. This looks a little better. So you can kind of see here that, you know, when the VIX was getting really, really low at around 27, you could start to see some of that accumulation here. And then wouldn't you know, it spikes up. And then you see, you know, some distribution and people probably still holding. And then you'll see, and then we saw this big spike. So in order, to kind of read some of these things here, it's like back on, Friday the 13th, I think we had a decent down day or something, but, and then we had the VIX spike. That still went up, a couple of bucks per share just on that one day. The only thing that's been unfortunate is that there's been a volatility crush. So the shares themselves are a little bit lower than what they probably should be realistically. Anytime you make new highs, you're gonna get a volatility crush. But the big thing to note is that not only has the volume gone up significantly, that's net buy, but if you look at oh, sorry, that's not going to show it. Let me show the VIX. If you look at the VIX from a historical perspective, it's nowhere near as close to the low as it was, back, let's say July 24. So right before we had that big, the Japanese yen carry trade blow up, and we also had less of a spike with the tariff blow up. So we had less of a chart reaction for the Nasdaq when we had more of a volatility reaction, and then it flip-flopped the last time. But the nice part about it is that you do find support at these levels for the VIX. So I'm thinking that there's not really, even if it does head a little bit lower, you're this just tells me that people are holding on to puts or longer term, longer dated puts than historically has been the case. So there must be some more uncertainty out there, or just people saying look, I'm not gonna I want out, or I want to something weird's gonna happen. And I'm in the same boat. I think it's only a matter of 12 hours before something else weird happens and somebody says something stupid and the whole world is on fire, and then we make all new all-time highs, and I'm wrong. But
right.
So to kind of close off that question here with the UVIX, just looking at it at the daily level, it's giving me confidence here that people are trying to now play volatility, and they're trying to get in while the VIX is low, because in my opinion, it's the secret's out that shares are really, really low, and if you do something let's say you're selling puts against it, that kind of thing. It wouldn't be the worst thing to get premium than also get into the UVIX at a very, very low price. But you also have to be patient with it, because even though we have a lot of buys at this 28, 27 kind of level, it could still head a little bit lower if we make higher highs. But kind of to go back to what we were saying originally, that if there are just little incremental highs and we don't have this the rocket to the moon, that I think is, even with a rocket to the moon, I think the volatility is going to increase because everybody knows that a blow off top never ends well at all. So in both scenarios, I think it's a relatively safe bet. Even if you're entering little chunks at a time, I think that you can still play volatility on the long side while everything kind of consolidates. There it is again. It just means clumping a price, and while people are buying and selling it up. So hopefully that answered your question, sir.
Yep, perfect. Thank you.
Okay. Susan, you had another question?
Yeah. Can you just go through your thinking on the role of the bear put spread on QQQ, specifically two questions? Are you picking strikes that are a certain percentage lower than the QQQ, A? And B, are you you're picking about, I think this time it was about 5 weeks out when you rolled. Why that shorter term, why not roll maybe 3 months out, or excuse me, set them for 3 months out and then roll every 5 to 6 weeks. How do you think about it?
So when that spread was taken out, I can't remember, it was like, is it the 13th? I'd have to look back, but it was like earlier in June, or like when I rolled it before. The thinking there was that we were topping and there was going to be a reversal here, probably, in the next like 2 or 3 weeks kind of thing. But since the options had set for expiration like this Friday, as of Monday, when I saw that the market didn't continue to go down on the war news, it went up. That's where I'm like, okay, I got to roll these, because odds are these guys are going to, make a new high, or they're going to just keep pushing and keep it pinned there for a while.
Okay.
So I guess, like, to kind of, keep it short, the roll was more of like, I don't want to have to roll it again. and I doubled it. I doubled it and included a longer time horizon, because I want my money back, because I had to roll it like 3 times. So the thinking there is that by, elevating the strikes, now that the price has gone higher for QQQ, then it's sort of like the same cost to like buy it back and roll it, except for just like a little bit more of a debit, I guess, if that makes sense. Versus like an at the money sort of price, because those were really expensive. I wanted to say those are like $1,500 a put or something if you didn't sell anything. It's a lot. So that kind of tells me that market makers are pricing in high premiums for downside protection, because they probably see it coming too.
As a general rule, when you think about, and I'm sorry if I'm hogging, if somebody else, as a general rule, when you talk about how expensive certain options are, is it a percentage of, I'm not sure how people say it's expensive or it's not expensive. Clearly the VIX is one component of it, but how do you think a put on QQQ is expensive?
Well, so usually it's like the strike times 100, and just the regular valuation, and that's you're paying for that delta. But I think that the other piece that can make options more expensive is if there's not a lot of open interest.
Got it.
So like you might have these big block orders that come through that are just done by the dealers, behind the scenes, but then you might only get a handful of puts here and here that people want to sell, and those are from like the perma bulls. I think everything's going to the moon. It's, in my opinion, it'd be suicide to sell a put on QQQ right now. Even if you had billions of dollars to waste, I'd still think it would be a very, very bad trade. So market makers probably don't want to take them, so they're charging a lot for it.
Got it. As a percentage of what QQQ is valued at.
Yeah. And then you also have those other dynamics, like what delta you want, time horizon and such, but that usually is the same. So I think it's kind of boils down to like the risk to the dealer or the risk to the option seller that gets reflected in price. And if somebody has a better answer, please, chime in, because I'm not 100% sure that that's correct. I just wanted to, I'm kind of speculating on it now. Now that you've been asking, what determines if an option is expensive. I know the traditional valuations, but there's also that supply and demand dynamics that
certainly they have to be really liquid, clearly.
Yeah.
So you can look at the volume there. And then I wasn't sure if you're picking based on a certain delta, or if you're just saying, okay, I can live with this. And if the QQQ drops 5%, I'll probably be in the money and I'll be able to close out at some point again. Or if you're actually pricing it more exactly, is what I'm trying to ask for.
Yeah. And I'm really kind of trying to pick the sweet spot between all the different variables. So I don't want to pay too much for buying a put, because then if they make, they continue to make new all-time highs, I have paid way more for a put than I probably needed to. Because if we do get a 2 or 3% pullback, let's say even 10 within, let's say 2 or 3 weeks, then that option is going to be at max profit, no matter what the expiration date is. And you can easily, do that with a spread if you're 10 points below where the high is, or within a couple points, and you'll have to pay less and still have the same return. It's just you have a slightly higher risk of timing the top wrong, if that makes sense.
Got it. No, I think so. And if nobody else has a question, or does somebody else have a question? I can't tell. One quick question on the Greeks. I did something where when you went in and bought TSLQ yesterday, I thought I'm just going to play this a little bit with some calls, and I went out 4 weeks thinking I'm going to lose the money. We'll see what happens. So basically, with about a 13% move in TSLQ, I'm up like 80%.
Nice.
Yeah, I know. It was amazing. I didn't expect it. I kind of woke up and went, wow. And
Hey,
so, yeah,
going on a cruise.
to see what happened, and it was with play money. So my question is, do the leveraged single stock, kind of instruments that you play with, even the leveraged on the indices, do they have a higher IV? Because I can see where there's some delta there, maybe some gamma, but there had to be more than that to spike up almost a 6x, 7x of what the instrument itself did.
Yeah, that's right. So the each individual single stock has its own like historical volatility and also the implied volatility at the time. So
Okay.
it could be trading at, like, the risk premium could be trading a lot higher on something like Tesla because it's been so up and down, and that also kind of like ties back to the last question about the option dynamics of pricing, about like what constitutes an expensive put or an expensive call. I think it's just because like the dealers or whoever's selling it, they know that the risk of volatility is higher. So they're going to charge, like more of a premium for it. But if you get in there before you have some sort of, big sell or big buy, with the call or put, it'll be a lot cheaper. So even if there's a volatility crush in the VIX, the implied volatility is going to be a lot higher for that one single stock because there's more risk with an option of a single stock versus like an index option.
Right. So is there a way to look at historical IV on
Yes.
single index things?
Um,
Single stock things?
yes.
Leverage?
Yeah, there is I'm not sure what your broker is, but like on E-Trade, they have on their platform Power E-Trade, they have like they call it the Ivy constellation. And I'm not sure if other you might want to ask a question in discussion or something about it, because I know everybody has like different brokers and things.
Right.
But at least I know, like when I'm in E-Trade, they have this chart that's kind of like they have a dotted line for historical volatility, and then they have implied over the top of it. So that's actually how I used to pick dates to sell my covered calls, is when I could get more premium because the implied volatility for that week was higher.
Got it.
Yeah.
Okay.
So that's kind of, at least it depends on your platform, but you can also see it on option chains, options chains. But I think you also have to look at your like columns that you have on your default views. And I think you can add more, at least, every broker I've ever used, you're able to add more stuff to your view. So, add that implied volatility and then also the historical.
Okay.
And then when you're looking at that options chain, you'll see the delta, and that should be able to help with that. If not, just, send me a DM or something. I can,
Sure.
chat.
Well, I think I owe you a Yeti coffee cup for that trade.
No, it's okay. It's okay. I'm more of a rum drinker anyways. No, I'm kidding.
No, it was definitely you going in. I thought, oh, whatever. Let's see if this works. And sure, but it's more luck than anything. All right.
Yeah,
Well,
I'm glad somebody made some money, man. I'm like looking at my portfolio like, oh my God, people are gonna quit. Cool. Well, yeah. Any other questions or comments, concerns? Neil, anything? Okay, Susan, anything else? Or we could wrap. Okay. All right. Well, thank you guys for, let me just stop the recording here.